Afternoon, everyone. In the spirit of being on time, it is now 2:15, so let's get started. Welcome. I feel like I need to rename this session of facilitating partnerships and innovations, the future of APIs, to how to adapt and not die, following Mark O'Connell's presentation, as well as Daryl McLellan from Gold Money. I think they've set the key message that we are going to highlight today is how do you adapt so that existing players, not going to use the term legacy, can continue to flourish and grow and find new value propositions. So welcome to our session this afternoon. My name's Cathy, and I'm delighted to be here and be your moderator. I'd like to introduce the two gentlemen I have with me on stage. First of all, I'll introduce Jerry Norton, and Jerry is a consulting expert in payments from our UK financial services group in CGI. Jerry has a lot of payment expertise, having worked on infrastructure solutions, SWIFT, central market infrastructures, through to working with a number of clients around the world as they modernize their payment systems, whether it was moving to SWIFT, real-time in the UK, payment utilities, blockchain, APIs. So we're delighted to have Jerry here, though he is on a different time zone, so we'll have to poke him every once in a while.
I'm asleep already, yeah.
So make sure you send him questions, so that'll wake him up. The second person I'd like to introduce, and thank you for joining us today, is Mike Katchen from Wealthsimple. If you haven't noticed, he's also very famous. On the inside of your bag, there's actually an article of Mike, so I thought that was very apropos. So he's the CEO and founder of Wealthsimple. And you may say, why do we have an online investing company, a fintech company, here on stage at a payments conference?
I was wondering the same thing.
You were? Okay. I've got the answer. I think there's a few simple answers. So first of all, who Mike is. Mike is clearly a visionary. He was identified as an industry mover by the Financial Post, a change agent by the Canadian Business Magazine, and one of 500 people that will define the next 12 months by Askmen. Those are some pretty substantial qualifications to have him here on stage with us. Secondly, the other reason why it makes sense to have Mike from Wealthsimple here is whether it's a payment, an investment, a loan, the value proposition, the end-to-end value chain is being split up into various niche pieces. So he certainly comes from the perspective of online investing, but that type of approach can be thought about across payments, across any financial service. So it's very apropos to have Mike here, and I really appreciate you joining us today. Why am I here? So what qualifies me to be a moderator? I should also introduce myself. I'm part of CGI. I am a recovering banker. I'll put that out there first. And my background is payments, and I'm responsible for the payment products that CGI provides to market, helping our clients modernize around the world, whether it's through our payment services hubs like All Payments or through compliance solutions like HotScan. So I have a bit of an understanding of the payment space, and I'll help rally the questions around here. So let's start. First of all, you can't have at least one presentation at a conference without some sort of Dilbert commercial, or cartoon, pardon me. So I wanted to start here and ask Jerry, just a quick snapshot. How would you define an API in an analogy?
Yeah. For those of you who were at the Payments Panorama 2 years ago in Prince Edward Island, then I did a presentation about standards, I think it was, but I talked a bit about APIs then, so I was ahead of my time, actually. And I then made an analogy at that point, which was to a plug and socket, I seem to remember. So, the way to look at it, I think, is to say that, a bit like a USB port, really. On one side of it, I've got a whole lot of stuff in my PC or whatever it might be, or in my plug, actually, now my socket, an actual plug I stick in, which, we don't know what goes on in there, but I can plug anything I like into that USB port, whether it's my batteries for my bicycle, my bicycle lights, which I can do, or, of course, it's electronic mouse or something else, and it works, and we don't have to do anything to make it work. And so, in a way, I think that's my simple analogy. And then the second one, again, you don't see it happening, but your interaction between your browser and some server somewhere, there's a huge complexity in the way the HTML works and the browser interprets that HTML, but the actual interface between the two entities is extremely simple. 3 very simple API calls enable you to do all of that interaction. And before that, the IT industry had invented incredibly complicated protocols, and they never caught on. You get three really simple protocols or three simple statements, and immediately it catches on. So those are my two analogies.
So the socket.
Socket.
Perfect.
Plug
socket
socket.
too. Okay. And Mike, from a fintech, from a company that digests and provides APIs, what analogy would you use to describe an API?
So I'm nowhere near smart enough to come up with it myself, so I asked our engineering team for one this morning, and what they said was an API is like a bridge that connects two distinct geographic points. Without it, you would have to swim through a river filled with sharks. Now, I don't think that's 100% accurate, but I do think it highlights how important and useful APIs have become to building software products. And I think, for those of you that still might be struggling to understand exactly what they are, most of you have probably seen on the internet those little share with Facebook or share with Twitter functionality buttons, or the ability to sign up for a service or log into a service with Facebook. All of that is built through an API, a set of standards that Facebook has made available to get a certain set of functionality. And it's very simply put the way two pieces of software speak to each other.
Fantastic.
That's how I'd say it.
So if you remember nothing from this session, sockets, bridge with sharks. Lego's another one, but thank you for that. So before we get started, I'd like to understand how the audience understands and what you're doing with APIs in your own organization. So this is your opportunity to open the app, and in the details activity polls, click on the polls, and please answer the question. How far along is your organization in using APIs? You're implementing and using APIs, so clearly someone along the chain and doing a lot with APIs. You're funding and have plans in place to do something with APIs, so thinking about it. 3, researching APIs, and you now have 2 really good analogies to think through. Or lastly, don't know anything about APIs. Now this is anonymous, so if you answer 4, we won't know who you are, and that's okay. That's why you need to be here. So we can take a few minutes to do that, and Kelly, let us know when we've got an answer, and you can put it up on the screen. This is, and the other thing I want to say to the audience, we've got prepared questions, but I really want to make sure, we really want to make sure that we're answering the questions you have as we go through this. Please interrupt, put your hand up, run to the mic, yell, scream, do something, and we'd love to take your questions. We've got 2 very different perspectives here on stage, and it's a great opportunity to hear where their mindsets are at. So there we go. So wow, fantastic. So 64% of you have implemented or are using APIs. So clearly we have a very knowledgeable audience here. The second one is researching APIs, and we've got funding and do not know anything about APIs coming up as 3rd and 4th. So I think that sets the stage for us. I think there's a few questions we can probably quickly go through, given the audience understanding. If we go too quickly, once again afterwards, you can stop us and have some questions after the session as well. So we'll get started. Great. So the first thing we're going to start with is defining the APIs. And I've asked Jerry to put together a couple slides and talk about, in more detail, defining APIs. Now the slides are also available on your device in case they're difficult to see up on the screen.
Thank you, Kathy. Right, this is a quote, it's going on from Mike's bridge, really. This is a quote from a book called API for Dummies. There's loads of books, dummies books. I noticed someone's got one in the exhibition hall about ISO 20022 for dummies, actually, which is very good. And they're sponsored by different companies. I think this one is by IBM, actually. And I think the second sentence there is the sort of pertinent one. I wouldn't necessarily wonderful, versatile, I think is an interesting couple of words. But the point is, APIs are not new. We've been designing, technologists within IT have had APIs since the day first started cutting code, really. And they certainly were formalized within operating systems many, many years ago. So in that sense, from a technology point of view, they're not new at all. However, what is new is that middle bit of that middle sentence, really, which is enabling a business, i.e. you in this room, to expose content or services to internal parts of your organization, encourage sharing, etc., but more importantly, to external parties. And that's when you'll hear from Mike later on, that's crucial, a part of that. So that's the difference. And if you think about that, so it is a bridge, it is a socket, a plug, but it's effectively you're sharing that with somebody else. Whereas traditionally, these things were intra-organization. They were designed by IT people for other IT people to consume. this is a different paradigm. And the third sentence there is sorts of things that you could use it for, but that's what we're going to talk about in a minute. And the second slide I've got here is really, this is all about, my sort of theory here is that it's all about the digital thing. Now again, we all argue about what digital is and what's digital in digital and whatever. But, whatever it is, it's a wholesale change to the way that financial services institutions, banks operate. And it is fundamentally about breaking up the value chain. Cathy mentioned the value chain. It's about breaking up that value chain and doing some things differently. And again, we'll cover some of those things in a moment. But the point is that I believe that APIs are the key enabler of this new digital world. It's about how you break that chain up. An API is the mechanism by which you break that value chain up. And there's actually someone in the audience from Bank of England here, so I'm quoting the Bank of England here, but it's not for this, it's another part of the Bank of England. It's from a chap called Andrew Haldane, who's the chief economist in the Bank of England, and he does, it's in the public domain, this piece, but he does a brilliant presentation about how the financial services industry is pretty inefficient, okay? And he measures that inefficiency by saying that basically the IT spend in banking in particular, but it does apply to insurance as well, banking in particular is extraordinarily high for the concern to it's the highest of any other sector compared to the revenue that's generated. And so his argument really is that the banking is extremely inefficient. We spend a huge amount of money doing IT things, and it's all very proprietary, it's all not standardized, and it's all inside the organization, a lot of it anyway. Whereas if you compare that to many other industries, it's much more open. And you've heard these words, open, platform, they've been used all this morning. Most industrial sectors, and the classic one is manufacturing, you don't design your own screw thread, your own bolt, your own nut. You don't, in the car business, you don't design your own gearbox. You go to a gearbox specialist and you buy that gearbox and it fits into your car. Now, and there's an interface, that's like a plug and socket, that's an API. So, effectively, I'm arguing here that the API is a crucial component of a digital world. It is the way the digital world will occur in banking. And it is also a way of making the banking industry more efficient and lowering its cost, which in a way is what the whole fintech argument's about. Fintechs would argue they can do things cheaper, smarter, quicker than the traditional incumbents. So in a way, this API can be seen as a defensive strategy by banks, but also as an offensive strategy, as we'll hear about in a moment. And so the last point, and this is the last slide here, look at the last bullet on this slide, really. The point is the services are now no longer banking in a way, and much of the financial services companies, you effectively create the product, you sell the product, you distribute the product, you maintain the product. Mm-hmm. You service it in that sense. The point at the bottom is saying that effectively you're moving from that closed world to an open, to a distributed world where effectively there are other parties involved. You're sharing services, you're sharing manufacturing, you're sharing distribution. And that is what an API enables.
Excellent. Certainly the end-to-end manufacturing model from a car to car delivery is a good analogy to think through the value chain. And you've certainly highlighted the inefficiencies as a big driver. Mike, from your perspective, what else is driving this move to APIs?
Yeah, I mean, for us, it's a no-brainer. I mean, this touches every part of our business. So for those that don't know, we're a 2-year-old company, not even 2 years old, and we manage about $500 million today for 20,000 clients in Canada. And the only reason we've been able to do that so quickly is because we integrate with all sorts of third-party services using APIs to deliver a solution faster than I think an incumbent would be able to. So building our service from the ground up to be a fully automated investment management company that does everything from trade execution, onboarding new clients, reporting on those clients. We've built a lot of internal software, but we also take advantage of best-in-class software that's built by other third parties. And pulling those pieces together, we don't have to be the best across every piece of the value chain, but we're able to pull it all together to deliver the best in-market solution to our clients. And I think that's enabled us to move really quickly. Mm-hmm. And second is, it's also opening up all sorts of really cool innovations we never thought was possible. So that's I talked a little bit about being a consumer of an API, but a lot of the technology we build, we also make available to the public and third-party companies through our APIs as well. And one very specific example, we recently did an integration with Mint.com. So those that don't know Mint, Mint's an aggregator where you're able to pull in all sorts of financial data and see kind of your income statement and the balance sheet as a consumer and build a financial plan using all those sorts of things. And so we built this integration where you could now pull in your Wealthsimple data into your Mint account to be able to see how your investments were performing. But in the old version of the world, you do that and it would be closed. We decided to make it public, so it's available through an API that a client can build on top of. Within 2 hours of launching this feature, a client sent us a video that they'd uploaded to YouTube where they'd built an integration with our API and Alexa, which is Amazon's new kind of Siri competitor, this great new kind of digital assistant, where it could ask Alexa, hey, how'd my investments perform this month? Or how'd it perform today? And it would actually respond in real time. And that was an innovation we never thought was possible, didn't even cross our minds. I think that's one of the most powerful opportunities when it comes to APIs and an open architecture system. You have no idea where it can take you. It's a silly example. It's not a massive transformative innovation, but I think it's just indicative of the possibilities in the space.
Interesting to hear your view of being a consumer of APIs, but also a provider. And so here's a fintech being a fintech to other fintechs. In a way, I didn't say that properly, but certainly that's a mindset shift in terms of driving and moving to APIs. And I know there's, the regulatory environment, Jerry, is a huge driver and huge challenge. And we can't talk about anything without mentioning regulatory
and we've got
pressures.
Thanks. Yeah, in Europe, we've got an extra or a different driver, which is a regulatory driver. Now, it's there primarily to, I think, stimulate the competition and the openness that Mike's talking about. But the regulators have decided to sort of help nudge it, push it that way. So, as you probably get, I'm from the UK. Now, in the UK, which we may or may not be in Europe this time next week, but anyway, but at the moment I'm in the UK, Europe, then we have a thing, there's a piece of European Union legislation called PSD2, Payment Services Directive 2, which might affect some of you banks here anyway from the payment side. There was a PSD1, which I won't go into. PSD2's got lots of technical, as in not technology, but technical issues about payments in it. But it has got, very specifically, a piece about APIs and payments, which follows neatly on from Mike's point about Mint. So in PSD2, there's a specific couple of provisions which say that all banks, and indeed it just doesn't apply just to banks, it applies to card companies as well, and those cards can be financial services cards, but could even be petrol, oil cards, and from retail sector, that other things as well. And basically, providers of those services, banks and others, financial service institutions, have got to open up their accounts to a mint.com type competitor in order that those competitors can A, aggregate the data, they can do what you were saying about the Mint, but also B, initiate a payment on behalf of a customer. And those third parties will be, those people outside of the API will be likely regulated. They're called TTPs in the jargon, trusted third parties. So that's one piece of legislation which is forcing it in Europe. So everybody in Europe's got to do that, whether you like it or not. And that's really got to be there next year, actually, in some form. And there's another regulatory body, so many acronyms, another regulatory body in Europe whose job it is to come up with some sort of definition of what these APIs in the standards. So in theory, there'll be a standard for this. But even in the UK, so even if I'm out this time next week, British institutions will not be able to just think of it that easy, because the UK government is also trying to push this, either through our, we call him the Chancellor, but he's our finance minister, who put out a thing last year called OBWG, Open Banking Working Group, which was not just about payments, this was about investment products and other things as well, as you say, which again was saying, I want you lot to open this up, please. And there's been a report written at the end of the year about that. And that really was taken forward very recently, last month, in a report by the government, by yet another organisation in the UK called the CMA, Competition and Markets Authority, which is the part of the regulator which sort of encourages formal competition. Mm-hmm. And they've got this report came out in May, a specific clause which said, we want financial services institutions, this is retail banks primarily, to open up their services. We are going to create a body, I don't know who it's going to be on that body, but we're going to create a body which will define these standards and will force it. Yeah. So very clear statement in Europe.
And by the way, if you talk about why this stuff is so important, if you look at the Canadian context, we historically have been very closed, I think, relative to our international counterparts. Yeah. And if you look at the implications of that, in the US as an example, you have several companies that have gone public, that have become multi-billion-dollar enterprises by building these data aggregation services is just one example.
Yep.
In Canada, that wouldn't have been possible historically, and that's why we have no interesting companies in this space, really. So, I think it's a huge enabler, and despite the fact that I think we in this country generally have had this proprietary outlook on the services we build, have very closed, we can do it all ourselves, I think that openness, people are starting to see the opportunity and wanting to take advantage of it, and good to see some regulatory support for it in Europe.
So it could become regulatory in Canada. We don't know, but right now it is about survival of the fittest, to quote Mark. Sorry about that. But certainly there's going to be some consequences following what happens and when organizations move to this new API opened world, or whatever acronym Jerry brings up next. So what does it mean? Like, what are the consequences of doing this, Jerry? And I know there's a slide you wanted to go through to talk
Well, yeah,
that.
this is something that I wrote a little while ago, but it was basically taking that example slightly further. You can say, the concept here was a thin enterprise, and it applies to banking or indeed any wealth management, investment management. This was back to my earlier point, that you don't have to do everything yourselves. It was following Mark's thing about using other partners. So you can have a concept here where in financial services, the entity is very thin indeed, and it is relying on a series of third parties to do other things for you. And those ventures could be collaborative, they could be single parties doing it. So this could be everything from I'm selling somebody else's underlying product, someone else's mortgage, someone else's investment product, I'm servicing those, or it could be I am the person who's servicing it and I'm providing that service to somebody else to distribute it. So it's this whole thing about breaking up the value chain and the organisation potentially becoming very thin in the marketplace. And I think you're a very good example of that, actually. In the past, someone who had to do all of the other, you'd have done everything yourselves, and it would have taken you 10 years to get there and whatever. Now you take 2 years and do that. So that's really what the thin enterprise. But the other thing is that this is not all bad news. This is not about a bank having to give up all its space to somebody else, whether it's in payments or something else. Clearly, you can also be that aggregator, that third-party aggregator. Clearly, you could encourage other fintechs to be affinity partners of you, and they put their business through you. So it's not just about banks being hit and threatened. It is actually about the banks, you using these other third parties to your own advantage to bring new innovations to the market, to reduce your costs, to effectively combine with them to create these new innovative services. And that's really the power of it.
Mm-hmm. And so I'm just going to go a little bit off script here from a consequence perspective, because when Mike talked about being a provider of APIs and having that Alexa video, was there a downside to providing the API or the capability to the world that you experienced? It was all great having this YouTube video with Alexa.
I think it was all great.
That was fantastic.
Certainly. Listen, I think I think where you're going here is what's the downside to all of this, right? So let me paint one. When you build an API, and let's say we want to offer, I'll take an example everybody might know of. So Foursquare or Yelp, these great kind of services that let you search an area and decide what, review services. Mm-hmm. TripAdvisor, another example people might know. None of them build their own map technology. And so they use an API to plug in with, let's say, Google Maps. And so if you're searching your area and you want to find out, what's in my area, they'll plug into Google Maps, they'll get the data, they'll show you this great thing, and their whole service and model is built on top of that technology. What happens if Google says, you know what, we don't really want to make that available anymore, and they shut it down tomorrow? And by the way, that's happened before. Google has had these great services and APIs, Twitter's had it, where they've actually shut down those services, where companies have been dependent on them, and some companies have gone out of business as a result. So, there is this risk, if you want to play the downside perspective, if you build these dependencies on third parties to build a service, and they're core to the service that you're offering, what happens if that third party chooses to no longer support it, or to pursue a different path, or to shut it down someday? So there's that risk, and it's real, and it exists. Mm-hmm. But I think the opportunities and the upside, far outweigh that scenario, and I think it's, the movement towards breaking up these different services and much more simple interfaces and focusing on the technologies where you can build the best in class and then outsourcing everything else is inevitably the future of where this is all moving towards.
Excellent. Any questions before I go on to the next one? We can have a conversation here forever. Yes, please.
I have a question for Wealthsimple. While you're on the downside of APIs, you talked about being dependent on an API, but as a producer of an API, do you worry that this could make it easier or add risk to your business? Is that now you're a honeypot? You have an open API where everybody can see the details of how to gain access, informational access to your client's accounts. And so when you were building that API, did you contemplate that, and what, if any, defenses you put in place for that? Because I think banks may be quite aware and worried about that.
In terms of security, so I think the question was around, if you're going to expose all this information through an API, how do you ensure the privacy and security of your clients? Listen, I think this is an absolutely core and essential principle of anybody that operates in the online digital world today. The reality is when you construct an API, you have control over what data gets exposed and what structure, how you're integrating and authenticating, and being really thoughtful about how you do that. Regularly auditing the way that you do that. So in Wealthsimple's case, to be very specific, not only are we building by design with the best standards in terms of security and privacy in place, we regularly audit our system. So once a quarter, we hire a third party. We give them access to all source code. Say, can you hack it? And if they find vulnerabilities, you update it. And that's no different than any service that lets their clients log in through a website that has any data that's accessible through a website today. It's important to continuously be vigilant and continuously upgrade your standards as new best practices come into place.
And can I add something to that? There's a specific thing, the PSD2 thing that I mentioned coming from Europe. One of the reasons why it's proving quite difficult, it was quite an aggressive time frame for introducing it. One of the problems is exactly in this data area. So it's not the security piece, we can talk about later. This is the data, because the idea is that I'm not letting my bank or if I've got multiple accounts with my bank, I'm not letting my bank give all of my accounts to some third party. I've got to say to my bank which accounts and which data of each account can be released to a specific third party. That means the bank has got to implement quite a sophisticated data management policy.
May not have that level of granularity.
Absolutely, yeah, exactly. So I've had 2 checking accounts. I don't have to make both of those checking accounts available to a third party. I've got to say to that third party, I will allow you to look at one of those checking accounts, not the other checking account. And so I've got to let the bank's got my data, and so I've got to actually tell the bank which data it can share. Now, if you think about the consequences of that, that is quite a difficult job, both from how I allow that permission, give the permission, but how the bank polices that permission. So
and by the way, historically, this has been done pretty poorly. So if you think about a Mint example, the way that Mint first integrated, and most banks actually enabled that integration, was a client would use their exact login credentials that they would use for their bank accounts to enable read-only access through Mint. Yes. That's terrible security. It's absolutely abysmal.
Absolutely.
So our integration is nothing like that. Mint generates a unique identifier and an authentication token that you use to sign and integrate those accounts. So you're never having to give away, your key credentials to someone else or to another third party. So again, it's by design and being thoughtful about design and making sure that you're implementing the right security practices.
Selfish financial institution, I have a vast amount of data available to me, which I've got my own analytics team, I'm drawing my own inference, I have teams analysing the data for my own business benefit. Now all my customers say, what the heck, make my data available to these third parties. It sort of undermines the inherent value that I can extract from that data. How does PSD2 sort of address that sort of undermining of the value of the data?
Well, I think that is, in a way, Andrew, that goes to the nub of the thing, because I think the defensive strategy by a bank in Europe will be that they'll have access to far more data than the third party will have. So I would argue, and in fact we do argue, that and this is back to the consequences point that Cathy was asking really, the consequences on a bank of all of this, in Europe anyway, is that it's looking at this as a strategic issue. This is not a technology, it's not a technology issue. I can design the API. They're not easy things to design necessarily, but you can do it. Clearly you can do it. This is about strategy. This is about how much you're going to open up, to whom and how you're going to, as I said earlier on, your strategic partnerships. But the data piece is key to that. What data is going to be available, and also can I use that data that I've got on you to actually use that to my advantage to stop a third party doing something that I don't want them to do, or to give me a competitive advantage. And I think that is where the battleground is. And a lot of the large European banks are only just really looking at this now, actually. don't reveal any names, but the big banks, you know, the household names, they are now setting up strategy teams to look at exactly that issue. But at the moment, I think they see that as their defensive advantage.
I think I'm supposed to play the little bit of a disruptive mentality on this, so I will stir the pot a little bit.
Yeah.
I think that's the wrong perspective
Okay.
for two reasons. You know, one is it still holds that perspective that we as a single institution can do better with this data than by opening it up or through, you know, this kind of network effect that happens. So that Alexa example is one silly one of what happens that you don't know when you can open things up. And I think, you know, Jamie Dimon recently made the comment that we at Chase, you know, have more engineers than Google. And that might be true, but, you know, they never created Google or the sorts of technologies that have created the sorts of value of Google. So, you know, I think that's a naive perspective. That's a fairly historical one. The second one is ultimately, if it's at the end of the day enabling things that clients want, which I think is the most important perspective, actually, and clients are demanding this sort of thing. If we as an industry fail to deliver that, we're going to get left behind. And when it comes time to full circle, we're going to lose the credibility on the next round. And I'm not saying that was your perspective. I'm just trying to.
I completely agree with you. I think it is naive that people aren't taking a strategic perspective.
Yeah.
I think it's also naive to think that people aren't defensive of value that they've got inherently in their data and trying to hang on to it with a sort of, you know, their
For certain.
clutch.
For certain. I mean, there's no question this is a really tough problem, right?
Yes.
Yeah.
Yeah, so just as Blockbuster held on to their VCR and videotapes and CDs, sorry to keep bringing up that example.
But I think
very
you know,
different.
I think the interesting thing though about Blockbuster, and if you think about that example, I actually unfortunately wasn't in that session. You know, I think Blockbuster made the mistake of saying we had the actual physical copies of these things and the VCRs and the tapes, rather than we had the rights to the content, which is, you know, I think in this context, the right analogy, which is figuring out the right things where you can add value and the proprietary value in the context versus the wrong things, which is where you can run into trouble, right?
Yeah, I mean, I think the approach is certainly will bring value to the consumer and consumers of financial services, but you see there has to be legislation driven in Europe, so it's egalitarian legislation that brings benefit to everybody. But, well, if everyone had that sort of notion of the moral imperative of doing the right thing, you wouldn't need legislation. So I think that's something to bear in mind.
For sure.
And I think every market, just as real time evolves differently in every market, I think a regulatory push or framework to APIs will vary in different markets depending on the political drive and things like that. So there's another question here.
So we've developed a few APIs ourselves, and one of the challenges that we have is what technology am I using? If I zig and another bank zag, if I choose this data format versus another data format, then I don't have an open API. So I know that in the UK you talked about regulating the APIs. I was wondering if you could comment maybe on if they're standardizing on, say, REST versus SOAP or JSON versus XML.
I could. Do you want to go Mark first?
No, you go
Okay,
ahead.
I'll go first.
You
I think
take it.
there's two or three answers to that. There clearly is a standardization process going on, whether it's regulatory through. There's a funny organization called the EBA. Now, there's two. The trouble is in Europe, there's always multiple things. This is not EBA clearing. This is a thing called I've got to get this right, the European Banking Association, which was formed post-crash, which is effectively represents all regulators. They are coming up with some standards. So that's quite good, actually. But there's a technology group called BIAN, Banking Industry Architecture Network, is that right? Who a number of banks are members of, and technology companies who are also looking at API standards. So in that sense, there is a standardization process, which I think is absolutely critical, because otherwise, in fact, our last slide on this set, you know, the thing to be aware, you know, the beware here is clearly that you'll have different plugs and sockets, actually. That's the problem. So I agree with you. So standardization is critical. So there's at least 2 or 3 standardization exercises going on. I think the other way to avoid the issue is that there are vendors out there selling API management tools, which let you design and build the API through a sort of plug and play type sort of thing, drag and drop, sorry, but also sit there and police the API at runtime, because you need security police, you need policing, you need denial of service, because this thing's a public API, someone could try and hack you or do something, and therefore that will also be able to manage exactly your point, whether it's REST, whether it's JSON, SOAP, or whatever. So an API management layer is, I think, what you need. If you just come up and expose an API of your own, I think that will ultimately be wrong. You need something which is a layer which provides isolation in the way that you're describing. If that makes sense.
Do you want to add something?
And there are
to that?
vendors out there doing that.
I'm not sure I have much to add.
No.
I think that was.
Okay. Yes, question.
A couple times you've sort of characterized the Alexa notion as kind of silly, but I guess I'm not so sure, and I'm wondering if you think I'm missing something. But if you're using APIs to break up the value chain, doesn't that break up the vertically integrated company store model that most banks have? And couldn't we be looking at Siri as the supermarket for financial services?
For certain. I hate to use the word silly. I think, you know, it was, anyways, I appreciate you saying that. I think it makes sense. I think one of the most interesting things you think about is if you really want to play with this concept of everything proprietary versus everything open. You know, we built one of the very first investment management apps in the country. In fact, the only one where you can sign up and fund an investment account on a mobile app, you know, in 10 minutes or less on your phone. Great value proposition for us. I don't think it should exist in 3 years from now. Because why would it be the case that a client of ours should ever have to log in to a dedicated Wealthsimple app, have another app on their phone with a dedicated login to get, you know, access to the information, do the transactions they want to do? They can do all of that through Facebook Messenger or Alexa or Siri. That would be so much better in terms of the client experience. It'd be better for the distribution channel for us rather than have to go build our own. I think when you think about the total disaggregation, you know, enabling those services totally through a third party rather than through our own proprietary systems, that's the future. And I think it's better for clients. I think it's better for us. We'd have less systems to maintain. You know, our own proprietary app we wouldn't have to manage. And I think it's a really powerful kind of thing to think about because it's not at all the way the world works today, but I think is very much where it's going.
Significant mindset shift, for sure.
It doesn't really diminish your value proposition. It just creates a new presentation layer and allows that presentation layer to be personalized and adjusted depending on where the user wants to consume that information. So you're still adding value, except the customer journey can change. You're okay with that because your value proposition remains intact. And if there are more people using your system, your actual value decreases.
It's exactly right. And I mean, I think that the difference in the way we think about our business, and I think with the luxury of not having a legacy of decades, you know, in industry, is the only thing we try and do is build things that delight our clients. And so when our clients demand something, that's the North Star. That's the only thing we think about. If they don't want us to have an app and want to do it through here, it's a no-brainer for us because there's not this question of, oh, well, if we do that, what's the implication of, you know, losing business through our, you know, proprietary app or other channels that we're using. We don't have that sort of legacy mindset, which is, I think, part of the exciting challenge for the industry and opportunity for fintechs is when you don't have that encumbered legacy and history and channel conflicts and all the rest of it, how quickly you're able to move to create these delightful experiences for clients. And I think that speed of change in this industry is going to continue to accelerate. And that's super exciting, I think, for this space, and payments in particular.
So I think it's a good segue into our next question, is just how do you make this happen? How do you do it in order to facilitate partnerships and really find the win-win-win for everybody through this world? So Mike, I think you're best positioned to give us a view on that.
Yeah, I mean, you know, I've talked about a couple examples now of things that we've built. When we came to this, and when we launched the business, you know, most Canadians, and still today, most Canadians, when they sign up for an investment account, do it with pen and paper. You know, if you want to sign up for an investment account, you fill out 30 pages of paperwork, you got to fax it in, you got to mail it in to open up an investment account. One of the first things we did was created this wonderful digital onboarding experience. We'd love it if every bank, if every financial institution in the country, you know, would leverage the technology we built to offer that to their clients, because ultimately that's better for the industry, that's better for clients, it moves everybody forward. We can collect a small fee for doing that. It's way cheaper for, you know, the banks in terms of having to develop that each themselves. It's better for us because we've created a new business line. You know, that's a perfect example of an opportunity where industry can work together. And, you know, I think pull together the innovations and the best practices that are being built in disparate pieces of the value chain to deliver those best services to clients.
Okay. The watchouts. So sounds great, and we're going to build these bridges, and we're going to go around all these sharks and make sure they connect, because it's going to be soap on one end and Jason on the other end, and we're going to have regulation help us, but we know there's watchouts. And Jerry, you already spoke about this. You already mentioned this one in response to a question, which I think was a perfect segue.
Yeah.
What else should the group worry about? Because this is a different world.
Well, I think for me, I mean, this is problem number one. You know, the proliferation of standards. Your point exactly. I think you can deal with that partly through this API layer concept, but it still is something to be mindful of. But I think the other big issue, which is clearly coming out, and again, it would PSD2 in Europe, is because the idea, obviously, is that it's all European countries. This is not just Eurozone countries; it's all within the European community. So, by definition, in theory, these services would go across national borders. Yeah. So the whole issue about, Mike started talking about it, security, authentication, credentials, the sorts of things that were talked about this morning in the SWIFT presentation. All of that piece of it actually has got to be part of this. Otherwise, you can't use this in the way that you want to. Yeah, and the European, your usual thing, the European Commission deals with that, but sort of deals with it in a funny way. So it's got another piece of legislation, which is called Secure Pay, I think it's called, which is coming from the European Central Bank, which is yet another body we have. And they have come up with some standards which, of course, are slightly slower coming to market than this lot. And so, there will be allegedly some fix, but you need some sort of federated ID for it to work properly, just like you say, like a login for a Facebook or a Twitter account. And at the moment, if you think about it, in banking, we do not have such a thing. So, I think, to me, the watch out is security, privacy, data, as we said earlier on, but this IDV stuff, the authentication, all of that. And I don't see how it can work very well across countries anyway, unless you have that. So that, to me, is the big issue.
And certainly, Mike, you talked really about how this can delight customers and really thrill and really enable new value. Data, digital authentication. Any other watch-outs that the group here should worry about, both as providers of APIs or consumers?
I think, the one I mentioned would be the one that comes to mind, which is the key, I think, going forward will be understanding as a business where you derive your proprietary value as an organization and how you deliver that to clients. Our view is get really good at that and outsource everything else. Now, the wonderful version of the world is the one I painted, where you get to leverage all the best-in-class technology to deliver this delightful experience. The bad scenario is if you build this solution that's so dependent on all these disparate third parties, does it become unmanageable over time? What happens if pieces of that shut down and you haven't designed yourself to be able to support that internally? I don't think that world is one that's real, but I think it's an important one to think about. But I think the real challenge is that one of understanding where your organization truly delivers value. And I think that's the key to what you're going to see over the coming years as the pace of change in this industry accelerates. The companies that thrive and continue to grow and create massive value for their clients and their shareholders, I think, are the ones that are going to really deliver that, because they're going to enable all sorts of new services built on top of that infrastructure and be able to capture tremendous value out of that new system.
Excellent.
And can I just add one thing, actually? I should have mentioned in a bit that regulators are worried about this now. If I've got this chain, I've got a chain of companies helping me deliver my product out to the marketplace. If I'm worried about the cyber security, then one of my companies, my third parties, where does their code come from? I might be brilliant on my code. I might have all my code certified and I've got it all checked out. But that third party I'm using gets something. They've taken something from the internet, which has come from somewhere else, which has come from somewhere else. That may have some security vulnerability in it. And I think that is the big issue at the moment. A lot of regulators are worried about that chain. And of course, you're only as strong as the weakest link. Yeah, and that's what we heard this morning about SWIFT. So there is an issue there about that sort of chain and how that chain of entities are bolted together and the software inside them, which is clearly a concern.
I think we have time for one more question. We've heard lots of questions from this side of the room. Anything from that side? Maybe I'm blinded by the lights. No? Any question? I thought I saw a hand here. Yes.
I think the other aspect to keep in mind is capacity planning, because if you have an API, you have a better understanding of the audience, who's using that for and when. You may need to throttle, basically, if somebody coming in and anybody can use it, it's open API. It's not meant to harm, but if you suddenly get access to a bunch of people who find a way to take value of the system, you may use the system beyond the capacity you plan for.
I think that, yes, denial of service type attacks, but also, capacity. I mean, you can't predict the demand supply in the way that you might do in more traditional approaches. So you've got to cope with much higher demand, although you could have some cloud-based service in theory to do that. But yeah, I agree.
In my version of the world, as a newer company, too much demand is a wonderful problem to have.
Excellent.
Yeah.
Excellent.
In theory, yes.
Yeah.
Yeah.
So we've come to the end. So Mike, thank you so much. I think your perspective has really helped and drew out quite a lot of interesting insights. Jerry, thank you.
Yep.
I thank you for your insightful questions, and I hope we were able to get through understanding and explaining how you facilitate partnerships in this new API world of survival of the fittest by putting together all these various pieces so that we connect. I think the bridge analogy was so perfect given the Payments Canada Connect tagline given today, whereas APIs are a way to connect, thrill, and delight your customers. So not to be afraid of it, to manage it, and to really delight your customers. Thank you, everyone, and have a great rest of the afternoon.